Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. I am your host, Dave Zagel, and this episode is brought to you by CWOs for Hire, which is the retirement and tax planning firm that I co-own, where we help people with their retirement and tax planning and just give them a lot of peace of mind and help in their retirement specifically. Who doesn't love a good discount? Well, apparently when it comes to the stock market, a lot of people don't like a good discount. They don't like seeing stocks and the overall market declining. But I'm here to tell you that you absolutely should want this discount. In fact, you should love when this discount happens. But it's hard to do. Nobody likes to see their dollars decrease. If you have, let's say, $1 million saved up and the stock market and your investments go down 10%, and now you're at 900,000, that's not much fun. However, if you're freaking out about that and you're saying, hey, gosh, I just lost $100,000, I'm here to tell you that thought, that mentality is assuming that the market is done. It's never going to go up ever again. Which, has that happened? Not that I can ever think of. I don't think that there's been a time where the market has dropped 10% and then stayed flat for several years or even a decade. I mean, we've had things like 2008, 2009, where that took about 5 years for it to recover and then go higher. So it took a little while to recover for sure, but we are way up since that point in time. So even in those couple of years, those 4 to 5 years really where it took it to recover, looking back, that's even a blip. I know it's a huge deal back then, and we were really concerned about everything collapsing, rightfully so. But even that, in the grand scheme of the past few decades, is a tiny blip. So when we get this stock market drop, try to change that mentality, because we have to understand that this is just temporary, or the whole world has changed and we really need to change the planning overall. If you're down 10, 20%, don't freak out. The market has this long history of going higher. We just need to make sure that we are set up for this and that we can take advantage of it. So what are a couple ways that we can take advantage of this? Well, first, if you are still working, especially if you're younger, but even if you're older and still working, if you're contributing to something like a 401k plan, then by definition, if the market goes down, your new contributions are buying at this discounted level, which is fantastic. We should be cheering this. This is wonderful. It's like going to a department store and getting 20% off. Great. This is what we want. So don't fret so much about temporary declines in the market. If we're really viewing this long term, it's actually a fantastic opportunity if we are buying in with new money. Now, how else can we take advantage of this, or at least take off some of the concern of this? Well, we talk about this a lot. When we look at retirement planning, we always set up at least 5 years worth of income in things like bonds, CDs, cash, money markets. 5 years worth of income. That way it's set, it's steady. You know, for the next 5 years, you are going to at least have this set dollar amount every year, every month, every week, however you want to take the money in. We want to make sure that those 5 years are set. The reason for that is to go back to the 2008 example that we talked about earlier. When we have a big decline like that and it takes 5 years for it to get back to where it was, you've already taken that money out of the market when it's been doing well. And you have 5 years to then let the market recover. So when we're working with clients and when we're talking with people like this on the podcast, all you listeners, setting it up this way really allows you to be comforted by the fact that Okay, market's down 10%, 20%. I don't care. I got 5 years worth of income. It might be back to even 3 months from now. Even if it takes 3 years to get back to even, we still haven't lost anything. We've already established our income for these next 5 years. We can let the market do whatever it wants for the next 4 or 5 because we've already got this covered. We don't have to worry about these short term fluctuations. And in fact, there may be a lot of opportunities in this downturn if we can reposition some of the investments, maybe get a little bit more aggressive than we had been because there's now a discount. Lots of things that we can do to take advantage of this discount because we've set up that 5 years worth of income. If you are near retirement, this could be an even better situation because you could have both of those things. So a lot of people who aren't retired quite yet, if they're getting close, we will have already worked with them to set up the 5 years worth of income. Plus, they're still working and contributing to a 401k plan. So they're getting to buy in at these lower levels. And they've also got 5 years worth of income for their first 5 years of retirement set up. They've got many, many years for this to come back. They're able to buy in at lower levels. It's a fantastic thing. So welcome these discounts. Don't run from them. First of all, understand that they're going to happen. We've talked about that in previous episodes where the market's going to go down. It's going to happen. We don't really care as long as it's short term, and it actually goes down more frequently than people think. They just tend to be very short term in nature. So enjoy these discounts, be ready for them, set up the investments to be able to handle them. That's why we have the 5 years worth of income that is guaranteed from bonds, money markets, CDs, cash. We want that locked in and guaranteed. So we give the market plenty of time to come back and be ready with strategies or either new money to come in to invest when the market has gone down. These discounts are a wonderful thing. They can be very emotionally challenging because nobody likes to lose money, but just keep in mind you haven't lost anything until you sell. Try to reframe as best you can and understand that if you are really, really concerned about a market drop that has happened, that your mentality is assuming it's never going to come back. And really, in recent history, recent being 100 plus years, it has always come back. Sometimes it's taken 4 or 5 years, which is why we have the 5 years of income. But just understand that if you're having these thoughts of, oh my gosh, I've lost money, keep in mind you haven't lost anything yet. If you've set up everything properly, you really haven't lost anything yet. And keep in mind that the market does come back and your mindset is assuming that it's not going to if you are really worried about it. Hope that helps just reframe things because a lot of times this is an area that we see causes a lot of stress for people and it doesn't need to at all. It really should not be a big deal, even though I know our human nature makes it so that it is. We don't like losing, but just keep in mind you have not lost if you structured everything properly and are focused more on the long term.